Welcome to Wealthy Lead. The money you earn, spend, and save every day has a specific origin, and it operates completely differently than we are generally taught. When we picture the creation of money, we typically picture a physical process. We imagine heavy industrial presses churning out massive sheets of $100 bills, ready to be bundled up and shipped out to the economy. We think of the U.S. Treasury operating secure, heavily guarded facilities that control the exact amount cash flowing through the world. This chart visualizes the total global money supply. If you look at the tiny highlighted sliver here, that represents all the physical cash in existence. It accounts for less than 10% of the world's money. That leaves a massive 90% piece of the pie completely unaccounted for by physical printing. If the printing presses aren't making it, where does the rest of the supply actually come from? The immediate assumption is that the government handles the rest electronically, but the Federal Reserve doesn't actually mint this bulk supply for the everyday consumer. The vast majority of the money in circulation is brought into existence by the local commercial banks right on your street. Let's look at a standard transaction. You walk into a bank branch, sit down with a loan officer, and apply for a $500,000 mortgage. People hold a persistent belief that banks act as simple intermediaries. The idea is that they take the combined savings deposits from their other customers and pass those exact funds on to you so you can buy your house. We visualize a giant vault storing cash, and the bank simply reaching into that finite pile to hand you a loan. Commercial banks do not operate this way. They do not lend out pre-existing deposits. If the bank didn't take your $500,000 from the vault, and they didn't take it from other savers, that money did not exist before you walked in and signed the paperwork. The exact moment of creation happens when the bank simply opens a new account under your name and types a 5 followed by 5 zeros into their computer system. This relies on an accounting principle called the double entry ledger. Every transaction requires 2 entries. The new loan is simultaneously recorded as an asset for the bank because you owe them, and as a liability for you. The moment the teller hits enter, brand new purchasing power is conjured into reality. The overall money supply officially expands. This diagram shows exactly what backs this newly created capital. It is entirely supported by your signature, your legally binding promise to repay the debt over time. This system is kept from collapsing by regulations called reserve requirements. This is a rule dictating the specific ratio of actual capital a bank must hold in reserve compared to the massive amount of new digital money it lends out. Central banks control this flow by adjusting interest rates. Lower rates make borrowing cheaper, encouraging commercial banks to write more loans and create more money. Higher rates do the opposite. The digital ledger functions as the actual substance of modern currency, rather than a mere tracking system. Modern wealth is an elastic, digital network of trust. It is not a finite metal dug out of the earth. This flowchart tracks how that capital aggregates across the economy. Every node represents a loan, pouring into a central pool. That means virtually every dollar sitting in your bank account right now originated as someone else's debt. When banks issue loans at a rapid pace, the supply of money swells. If it grows faster than the actual goods and services available to buy, the purchasing power of your existing money dilutes, causing inflation. Reversing this has the opposite effect. When you pay off a loan's principal, that money doesn't return to a vault. It is deleted from the ledger, destroying money and shrinking the global supply. You cannot build true financial literacy without seeing this direct, mechanical pipeline between debt creation and the wealth sitting in your wallet. To continue mastering the hidden mechanics of your money, subscribe to Wealthy Lead and join us for the next breakdown.